Time for Tap That Trade. Let's bring in a couple of bruisers. Phil Flynn, a Fox Business Network contributor, and Alan Knuckman, the Chief Market Strategist at St. Paul Research. Here we go in our trader game. Round number one, split them up. Google's 20-for-1 stock split is getting a lot of buzz. What are your split thoughts?
Well, I think stock splits don't actually do anything, but they help psychologically because they make the share prices appear cheaper. And so that could be a catalyst for retail investors. It could happen to a lot of these stocks that have gone up and away. You've got Tesla, you've got Amazon. Google made $76 billion last year, which is more than they made a pure profit in 2019, 2020 combined. So I think that can be a positive. And one thing to say about the splits as well, that people are now talking about this being a lost decade with the stock market. I don't believe so, but some people are saying to reduce their exposure and their split to the stock market from 60-40, mathematically 50-25-25, with 25% in alternative investments has proven successful.
You know, I like the idea of stock splits when these companies get very expensive because I like the new retail investor element, right. and they're being locked out of a lot of these good stocks. So if you can baby step your way into these stocks, that's a good thing. You know, about the old 60-40 splits, you know, philosophy where you have 60% in stocks, 40%, you know, in bonds and stuff. That has been outdated for some time.
Round number two, food for thought. Americans will do some extra food consumption during the Super Bowl game. Chew on this. Pork prices are now twice the price of crocodile meat in Thailand. What do you see in the lean hog futures?
You know, I've never eaten crocodile, but I have had alligator. It's not that bad. You know, they say it tastes like chicken, like everything tastes like chicken, right? But, you know, I don't know. Can you get alligator wings? It might be cheaper because going into the Super Bowl, there's been a shortage of wings. I know. Is that crazy? I'm old enough to remember where they used to give wings away because it was, nobody wanted them. Of course, I would get them for free. Go to the bar, that would be, they would give them away. Not anymore. Wings is big business. You go back to the pork a little bit. Pork is very bullish right now. What we are seeing here is because of the situation with COVID, the shutdowns that we've seen at some of the major rendering plants have caused this situation where the hog market has been undersupplied. We couldn't kill enough hogs a couple of years ago because the plants couldn't take it. They cut back on the hog herd. Now the supplies are shortage. So hog market looks very, very bullish. Tyson, of course, is the big name that everybody talks about when it's meat. That might be a stock to take a look at.
So I like to use the word harvested. And yeah, we had to harvest a lot of hogs years ago. But if you look at hogs are about 20% off the highs from 2014. You know what else is 20% off the highs from 2012? Is corn. So I think there's a play there. I think both still have some more upside.
Rounds number 3, pan up. There are stocks that were stars during the pandemic. Think Peloton, DocuSign. Pick a play that you think can get healthy again.
The stock I like is Plug Power. Plug's been between 20 and 40 for about 8 months. Bullish divergence bottom here. I like the risk reward here. The top stock on this list, when I came up with this list earlier in the week, was Peloton. And Peloton is an illustration that when everybody changes their sentiment, these stocks can surge.
Peloton, of course, was an incredible story. Like it rearranged the industry the way everybody thought about exercise bikes and exercise media. But it really was getting out of control. I mean, those prices were absolutely crazy. Now the stock has come back down to earth. They have, new ownerships, new buyers. So that's how things can change. And that shows you how price movements can actually move a stock. You get activist investors that look at stocks, find out if they're being as efficient as they can be. And this is a perfect case. So there's probably some really good value in these stocks that have fallen down. DocuSign is that other one that Angie mentioned. I like that stock. It will be back. And I think everybody now in this digital world is going to continue to be signing things digitally. So I think that's a good stock.
Here's your Super Bowl bonus round for today. Can you pick the ticker that is a true ticker? Will it be NFL, AFC, or NFC?
I'm going to say the real ticker is AFC.
Alan?
I think NFL because it's not obvious.
The answer is NFC. The house wins on this one, but you guys are always winners, and we are going to toss it to break right now. Go to businessfirstam.com for where to see our show on TV.